Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a breakdown of the action in today's session, where we saw another day of gains, and a nice one, especially for small caps, as we're seeing more signs of cooling inflation. Ken?
Yes, most definitely. Not such a bad day for the market. Looked like we were going to fade during the final hour of trading, but ended up getting a decent close with, indexes closing nicely in the upper half of their trading ranges. Found three stocks to talk about in the semiconductor space. Chip equipment firm KLA. This is an institutional quality stock. KLAC is the symbol here, looking pretty good. Insulate in the diabetes space, PODD. And also in the energy space, ChampionX, CHX. So there you have it.
Yeah, we'll take a closer look at those three stocks, but first we got to analyze the major indexes, and we'll start with small caps since it was such a nice day of outperformance there, with the Russell 2000 up 1.6%. Here's a look at the IWM ETF, which tracks small caps. We also had the S&P 500 up 0.3% today. That was the lagging index. The Nasdaq and Dow both up 0.6%. So starting with small caps, clearly now seeing a 5-day win streak here, getting decisively above the 200-day line, clearing a trend line. We still have one more day to go this week, but how do you feel about where we're at now, Ken?
Well, so IWM and the Nasdaq, that's five gains in a row, but this was a legitimate breakout today over a trend line for IWM, and there was some volume that came into the ETF as well. So I think it was the second day of outperformance for small caps. So technical picture looks pretty good here. It's above all its moving averages, but when we look at the the Nasdaq and the S&P 500, things still look a little challenging. On IBD Live, we're just talking about the Nasdaq closed above its 50-day moving average yesterday and was able to extend gains and mark a decent close. It looked like preliminary data volume pretty close to what we saw on Wednesday, maybe even a little bit higher. So it's good to see the Nasdaq above its 50-day. Its next challenge, obviously, is this 11,000 level, just a round number, and we'll see if the Nasdaq can eventually conquer that.
Yeah, this round number at 11,000, it closed right above it by about 1 point today. And if you just draw that horizontal line, you can see the action touching that level going back all the way to last May. So could be a critical juncture here. But as you said, as we continue to move higher, if we continue to move higher, more hurdles remain. But let's also take a look at the S&P 500, the weakest index today, not decisively above its 200-day line yet, like we're seeing for the Russell 2000. A pretty definitive trend line here on the weekly chart as well, with a lot of touches of the line right around that 40-week line, going back to those all-time highs. So it feels like we're at a critical juncture. We're seeing those higher lows at this point, Ken, but not quite yet the higher highs. We could be on the cusp of that, though.
Yeah, no, it's we're not out of the woods yet for the S&P 500. Back to the daily chart here, and you can see the Nasdaq tried to make a brief bid. It kind of went up right to its 200-day moving average, closed off its highs just a little bit. So, this is what overhead supply looks like. You have this round number of 4,000. You have that recent high of 4,100. When I look at these volume bars on the S&P 500, just looking at recent up days, volume has not been above average yet. We had a higher volume gain last Friday, which qualified as a follow-through day. We had a higher volume gain yesterday. As you can see, volume is still below average. It would really be nice to really start to see some upside volume in the S&P 500 pick up here, and the Nasdaq for that matter. That would just be a sign that maybe some institutional money is coming in from the sidelines, and the more institutional buying we have in the early stages of an uptrend, I think the better chance once the rally has of working. So seeing it a little more on the Nasdaq, some above average volume gains recently. So maybe a little bit of accumulation going on here, but all in all, still reasons to be optimistic about this tradable rally. There are some setups out there, but as we've been talking about, the environment for growth stocks is kind of a mixed bag at best. It's not like you can look at just a good growth stock and say, well, we're in a confirmed uptrend. This is bound to break out to new highs and follow through. I don't think we're not quite in that environment yet.
And it feels like all of the major indexes are at pretty critical tests now. And again, we have one trading day left in this week, so we'll have to see what that brings. But even the Dow, which had been really outperforming in the last quarter of the year, so its pullback has left it looking a little bit more solid above all of its major moving averages than the other major indexes here. But even it has on the DIA ETF 340, the Dow itself 34,000 could be roughly around a level to contend with. And we can't forget, Ken, that we are seeing NASDQ. Yeah, I thought that's what I typed. Okay, there we go. We are seeing we're at some overbought levels here, so we can't forget that either.
That is true. I mean, there's still yellow flags out there. I mean, this short-term overbought, oversold oscillator that you can find on MarketSmith, like you did, typing in NASDQ, that is at highs where the Nasdaq has pulled back in the past. So Nasdaq is looking and a little bit overbought. And then we were talking about a viewer on IBD Live this morning, just talked about the VIX, the CBOE volatility index, and that really had a really bad day today. You can see it just the bottom fell out today, but it's getting down near lows where the market has started to weaken as well. So between the VIX and the overbought, oversold oscillator on the Nasdaq, those are two yellow flags to pay attention to. Again, leaderboard is still 52% invested thereabouts. We did not add anything to the model portfolio today. Still being very discerning with new buys. So still have fairly limited exposure to the market here. If this uptrend is really going to start working, we should have more opportunities to increase exposure. So just kind of, treading cautiously at this point.
Right. And the team will be sure to provide updated thoughts in the early going tomorrow on IBD Live. So we hope everyone joins us for that. Let's also take a look at the 10-year Treasury yield, 0TNX, coming off here. Ken, what do you make of what we're seeing on the yield front?
Well, this was a noticeable downward move in the 10-year Treasury yield today. So a lot of bond buying today. I don't think the yields are going down because the market is expecting the Fed to pivot soon and start lowering rates. That does not seem to be on the horizon for a while. But I think this big drop in the Treasury yield is just investors worried that the economy is still vulnerable this year, and there's still a chance of a recession. That's what the bond market is saying anyway. And we haven't really talked about the inflation data yet that we saw this morning, but it was mostly in line. The consumer price index, no real surprises. Inflation cooled again like it's been doing in recent months, but core prices still up 5.7%. For the month of December, that was lower than 6.6% in November, but 5.7% is still way above where the Fed wants it to be. So it's going to take a little while to bring inflation down. Clearly, the bond market is still worried about the economy here and the prospects for a recession and not a soft landing for the economy, which the stock market is sort of hoping for and rallying in anticipation of.
Yes, inflation cooling, but still seeing those elevated prices. Something funny that I saw on Twitter today, someone said, I don't usually flex on Twitter, but I ate 3 eggs this morning. So those
That's a flex.
pricey, yeah, that's a flex nowadays. Those expensive eggs, eating 3 of them. Thought that was funny. Okay, let's also take a look at the dollar because we look at yields, also looking at the dollar. It too coming off pretty notably today, Ken.
Yeah, I mean, this was a notable move, just like that drop in the 10-year yield. So, the market likes a weak dollar. The dollar has weakened quite a bit, so not surprising to see, the Nasdaq up for 5 straight sessions. But we don't mind the dollar weakness here. It tends to be good for the stock market, but a notable decline today for sure.
And energy XLE here, we did see a trend line break today, just like we saw, and getting back above the 50-day line in the first week of January in 2022. Can we see a repeat? Who knows? It's a different market, the sector in a different position, but an interesting move here today from the energy sector.
Yeah, I just thought it was noteworthy that XLE was able to move above its 50-day moving average here earlier in the week on Monday. It tried to do it, but it reversed lower, got some resistance. Volume picked up the pace. You do have 3 straight gains now for XLE, where volume has picked up the pace a little bit, but still very, very light. So we always say that weak volume, whether it's an ETF, a stock, or an index, can often make for a weak foundation. When you see a stock or index rising, the more volume to the upside you see, the better. So not really clear. You see the accumulation distribution rating for XLE is a D, and that's almost the worst possible. And it's still sort of factoring in some higher volume declines for XLE as it corrected off its recent high, and then some lower volume gains here. So it would be good to see some, renewed signs of accumulation here as well, but a noteworthy move above the 50-day today for sure.
Great points there, Ken. Now let's chat about KLAC in the semiconductor equipment group. Down a smidge today, but closing well off its lows. It's having a good week, up about 5.4%. It's a pretty solid looking weekly chart. Quite a bit of resistance here, right around that round number at 400, getting above it nicely this week. Got an RS line blue dot underscoring that relative price outperformance. Earnings due in 2 weeks, but what is your thought on this chart as it stands?
Well, we had earnings from TSM, Taiwan Semiconductor, today. Why don't we take a look at that one real quick on the daily chart, see if that was able to hold its gap up, I assume. Yeah, that's there's a daily chart. Yeah, closed off its highs. They had pretty decent earnings report. It was interesting to see their CEO talk, saying that he thinks that this big inventory glut that a lot of the chip companies have been dealing with should be able to wind its way through during the first half of this year, and then maybe the sector can return to growth in the second half. And if that narrative plays out, it makes sense to see some of these chip stocks starting to rally. So the news from Taiwan Semiconductor fueled pretty good strength in semiconductor stocks in general today. Back to KLAC. This is an institutional quality name in the chip equipment group. Doesn't have a great estimate next year, but you can see it's been delivering pretty solid growth in recent quarters. The technical setup here is pretty solid. It's sitting right near a buy area here. It tried to go down today, closed all the way up near its high. So I think this still looks quite good from a fundamental and technical perspective here.
Okay, and PODD, peer to Dexcom, is also setting up here with it above the stacked moving averages. We like to see that above that round number at 300. Would you consider it in a buy zone from an early entry, Ken, as it continues to carve out the right side of this base?
Yeah, I mean, arguably, yes. I mean, it's up. It's been up for several days in a row, and some of those days were in higher volume, but you can still see volume has been pretty much below average during its recent win streak here.
Mhm.
I think it's just a good example. If you go to the weekly chart, it's just really just a good solid test of the 10-week moving average. So you can see every time I talk about support at the 10-week, you want to see a good blue up week. You want to see the stock up near its high, and so Insulate checks all the boxes here. It's trading up near its weekly high. We'll see if volume this week can come in higher than last week. But this is a good setup here, and the company's Omnipod system is basically a continuous insulin delivery system for diabetics, and you can see the annual earnings estimates here,
Yes.
and the top line and the bottom line growth in recent quarters. Still a pretty compelling
Mhm.
growth story here. So we're seeing this stock holding up quite well in the market, but group here, Dexcom DXCM has really been struggling. So it seems like PODD is the name to watch in this group.
Yeah, Pod's gain is Dexcom's pain, it looks like.
Mhm.
And also, just comparing the not only the chart action, but also looking at the numbers, both are seeing anticipated accelerating earnings growth on an annual basis, but much stronger expectations for Pod here, Ken.
Yeah, and listen, diabetes is obviously a huge problem in the U.S., and it's, I think, 1 in 3 people I heard are pre-diabetic. I mean, it's really
Mm.
quite a tough deal. What's going on? I mean, we're just kind of getting heavy, and but Insulate and Dexcom are there to treat people with diabetes, so they're in a good area, at least demographically, and Insulate looks like the strong name right now.
All right. And last but not least, CHX is on our list to talk about, having a strong week of its own, up almost 7%. Not seeing that strong volume, it doesn't look like, but it is carving the right side of the base. And with the number of up days in a row here, and where it is above the 50-day line, which is now about 6.8%, so not terribly extended, but it looks to me like maybe it's due for a little bit of a pause here. A handle might be nice to see, but this is a stock that's in a very strong group right now.
Yeah, and this is really one of the challenging aspects of the market right now. Whether we're talking on IBD Live and going through individual stocks, we're just talking about just a lack of volume in a lot of these names.
Mhm.
So I would not be chasing CHX after several up days in a row, especially as volume has started to fade in recent days. But it is a stock that's got pretty good fund ownership. It's got an accumulation distribution rating of A. A lot of that is helped by when the stock initially broke out of that consolidation. But back to the weekly chart here, it's in a good technical setup. But you're exactly right. After several up weeks in a row, several up days on the daily chart, this one could just maybe start to drift lower here. But perfect name on the watch list. It's a company that's not an oil driller, but it provides engineered equipment to oil drillers, so they can look for oil and drill for oil, and more efficiently. So interesting company here with great growth, and also pretty big earnings estimates, selling at
Mhm.
28 times trailing earnings. Based on that growth, it looks like a relatively cheap stock here.
Yeah, and if you look at the 18-month mark for a lot of stocks in this sector right now, or at least the ones that have been leading, you see them having big gains over the last 18 months, whereas this one doesn't feel very extended and like it's in a later stage of its move compared with some of those other industry peers, perhaps.
Well, I mean, the good thing about this is we like these big, long bases, because it does
Exactly. Yeah.
it, it, yeah, it does give time for sellers to get shaken out of the stock, and look at, as this stock was moving sideways for a long period of time, and then it really started to move and break out. You had some good volume there, so that was
Hmm.
at least a sign to me that there were some institutions and funds in there buying. And then the pullback has been pretty mild. Again, this stock needs really volume to strengthen the base here, and we could get it. So we'll just we're in a tradable rally right now, just looking for more signs that big money is coming in from the sidelines. I'd like to see a little more of that, not only in the indexes but in individual stocks as well.
Yeah. Well, a compelling chart there, no doubt. Thank you so much, Ken. And thanks everyone for tuning in. We'll be back with more tomorrow morning on IBD Live. Hope you join us, investors.com/IBD Live for the details, where we will be joined by options trader Anne Marie Band. So it'll be great to have her back on the show, get her perspective of where she thinks we are in this market. Are we at overbought levels? Is there more room to run? How should we be thinking about positioning our portfolios, and maybe some option ideas that she has up her sleeve? So that's tomorrow morning, starting 10 minutes before the opening bell. We'll see you there. Thanks for tuning in, and we'll be back tomorrow.